November the 24th, 2025, 11:20 p.m. Monday night. As we go into the charts, we know we're on XRP, the price sitting at $2.24.8 on a 10-second chart, picking up on Cadence. And the previous video is on private. It's on private for a number of reasons, because looking at the moving averages can be very confusing. And sometimes when I'm rushing, I have to slow down to take the time to explain. So I'll explain things again, and we'll peel back some layers this time. The SMA wind channels. I've built a total of two. One is SMA wind channels, the other is WMA, weighted moving average wind channels. I'm going to peel back the weighted moving average wind channels. You may find two things disappear: the dotted white lines and the dotted green lines. Okay, so let's pull those back, and we see that they disappeared, they reappeared, they disappeared. The dotted white lines, that's the 111 and the 700, Golden Cross and Death Cross. It's a big one. It's a monster. It's big. And when it moves, you're in a really good place. And these lines here, the solid dotted green, excuse me for saying solid, that's going to disappear. That is the 200 over the 400. When you're in that particular zone, it's an area to pay close attention to, especially if you're consolidating within that zone. Let's pull those back. And now we can see three moving averages here. The 2 and the 6 death cross currently going on because of the red. Death cross meaning down. This paints the candles from blue to yellow, indicating a downward trajectory. Keep in mind the HYPNOTIC candles are on, because we're in the chart, and truly the body of the candles are sometimes so small you don't even see them. They're just little lines. So we have the HYPNOTIC candles on. So it makes the candle stand out. All right. Now, as we look at the simple moving averages, the wind channels, let's take away some things. We're going to leave the 2 and the 6 on, because that's always pointing to two direction. The 13 and the 48 will scale back. And this may be the 50 and the 200 will scale back. All right, we're going to start there. Now, moving averages are big. And as I've said in many places, many times in the history of the chart, about 90 to 95% of the time, you'll see the pattern of the prices traveling up through the negative or downward movement of the market, specifically the 9 and the 21 Golden Cross and Death Cross. Golden Cross is blue, price is going up, hence the large blue triangle. Death Cross is yellow, price is going down, hence the yellow channel and the yellow large triangle pointing down. And you will find that even though you have positive price action, we travel down through the positive just before it closes out. And if you have negative price action, when it's all said and done, you travel up through negative price action before the yellow channel closes out. So just watching these oscillations alone are big. And of course, combined with other things in the chart, based on overlaying other simple moving averages, you can pretty much find out just about when the price is going to go for a downturn and when the price is going to go for an upturn. And just remember, we travel down through the positive, up through the negative. Here is unofficial, and we travel back down again. It's only until it's official. So we're always watching the strength of the 2 and the 6 golden cross, the green paints the candles from yellow to blue, indicating an upward trajectory. So look at the shade of green. Closes out here, turns white, opens up here. Notice the triangle, the green triangle. And of course, it's large up in here. It thins out. And look what happens. The death cross comes in. But right after it, immediately the golden cross comes in. This channel didn't have a chance to flip white like it did right here. Green, white, green, white. So this is giving us a good indication about when the death cross is going to come in this instance, and about when the golden cross is going to come in whenever the white channel begins to become narrow and thin out. It's a nice indicator. And sometimes you have to blow things up really large so you can see the detail. Closing out, we know counting cadence, the blue can bring in the green. So we know that before this thing comes to a complete end, you'll usually travel above it, and then it flips. All right, so it gives you an indication based on the width of it, and it come to a narrow end. Now, that's the 2 and the 6. So the 2 and the 6 is what moved prices up and down. The 9 and the 21. I say it again. The 2 and the 6. This green turning to white. This 2 and the 6 carries you up and down. The 9 and the 21, the blue and the yellow. Okay. So now, can you see an indication of white here? Notice the white channel getting very thin. The golden cross of the 1 and the 3 comes in, triggering the 2 and the 6 from white to green. And the question is, would we have moved up there? But we don't even touch the 21 simple moving average. And so down a little more. White and then green, counting cadence, looking at the effect of the width. And sometimes you have to move on a faster moving chart, or you have to blow things up a little bit. That's green. That's a golden cross. So it's opening up wide. And just before this yellow channel closes out, that's 9 and the 21, will be above it. All right. So we say up through the negative, down through the positive, up through the yellow, down through the blue. That's big on price action. So now, when this channel that is yellow flips to blue, then you can travel down through blue, but you may catch a bump or a ride first. So let's just watch how this one plays out, and notice the 21 simple moving average flattening out since you landed candles on and above it. Can we still go down when the blue opens up? Yes, because the golden cross of the 9 and the 21 came in. So up through the negative, when we turn positive, then we can catch a ride up, but we can always have a little small blue. It can be very tiny of the 9 and the 21, and we can be right back down again. You can see that we're in the influence now of the 2 and the 6 death cross. And the green channel, it may just flip white. I'm sure there is some white up in there. Let's blow it up so we can see there's some white in there, right? The white is negative. So before it closes out from white to green, you'll usually be above that in candle price. Now we get a hint of blue, the yellow turning into blue. We can travel down through blue, but we can count cadence too, can't we? All right, so we can see how we travel down through the negative, even of the 9 and the 21, just a little bit, but before that white channel flips from negative to positive, we have to travel up through it. So Very subtle and really quick on the 2 and the 6. Really quick. But you can just about tell whenever the death cross of the 2 and the 6 is going to come in, because the green channel gets really small and narrow. Then we can see about when the golden cross is going to come in, because the white channel becomes very narrow. And before it happens, you're usually up through that. Now you're catching a ride with the 9 and the 21 golden cross, but you can still travel down through blue, because we travel up through the negative but down through the positive. So we're watching the 2 and the 6 become more narrow as an indicator of possibly beginning our journey down. Now, of course, I've taken some indicators off, so it's going to have more information. You see the market is heating up and cooling down in the background. The 21 simple moving average still moving up. The death cross wants to come in, and you can see that as we speak. The yellow and the red came in together. Okay, now will we travel down through the 9 and the 21 positive, down through positive before it closes out? We can get a bump up, because after yellow comes blue, but we're in the influence of the red triangle underneath it, the 2 and the 6 death cross. All right, so you touch the 21 simple moving average, you bounce back up. So before this blue channel closes, you will be beneath it. Okay, so we're just going to see that happen, and we're watching more information in the chart. Resistance was greater than support, but support just flew over, and support now is greater than resistance, so you're going up. You're counting cadence too. After blue comes yellow, and the yellow can usher in the red. All right, so we're watching the blue channel. That would have been a nice price bump up. Notice the width of the green. That can trigger the red 2 and the 6 to come in. Far above the 21 simple moving average, but of course it's a fast moving chart. We know that before this blue channel close out, we'll be beneath it. All right, so we're waiting for our resistance line to shoot over and be greater than our support. When that happens, we may have a bump down. It wants to happen, but in came the blue for another ride up. The green channel opens up, now it's closing. The yellow wants to usher in the red. There's the red. How far will it drive us? Yet to be determined. The green flips to white. You can see the little cross intersection there. When we get another candle, we'll see how far this takes us down. And when we start touching the white 21 simple moving average in the midst of the blue and in the midst of the yellow, you can see it moving up and moving down. The market's trying to make a decision. After yellow comes blue, and the blue can usher in the green. There it is. So right now you're dancing above the 9 and the 21 golden cross. That triggered here and has a lingering effect. So now just think, if this was a 1 week chart or a 3-day chart or a 1 hour or 45 minute or 11-minute chart, how you could be making decisions on if the golden cross or the death cross of the 2 and the 6 and the 9 and the 21, while counting cadence, will give you a good indication of if you should get out of the trade. Notice the pi cycle top. We have upward price action going on. The 50 and the 200 is in play, even though we took it off temporarily. So now resistance is greater than support. We're waiting for support to fly over and be greater than resistance. So let's see what strength this may have. Okay, our seconds aren't every 10 seconds spot on because of computer processing power mainly. And if we get internet lag or slowdown, you'll see the little bars come up here. All right, we're starting to land into the yellow, right? Well, I should say land into the blue. The channel is getting more narrow. After blue comes yellow. The yellow could usher in the red. The markets are cooling down. There's the yellow, there's the red. Will we touch the 21 simple moving average? Notice the green channel getting more narrow. It can open back up because after yellow comes blue or red. We have to see what happens. We touch the 21 simple moving average. Before it closes out, we will be beneath the positive. We are beneath the positive before it closes. We are above the negative before it closes. And just think what a beautiful run this could have been from here to here on a higher time frame. No need to measure the percentage now. This is just good information. Notice the two-pole oscillator value flowing out. We can open that up just a little bit. Notice the pi cycle top. Everything becomes confirmation. Notice the background. The market's cooling down. Confirmation. Notice resistance is currently greater than support. Confirmation. Notice the blue about to close out, and you'll be beneath the blue before it flips to yellow. All right, so that may happen on this run, or we could get a bump up out of it and the blue channel can open up more. We'll see what happens. There's the blue. Will the blue usher in the green? Sustaining it just a little longer, or are we said and done? We just have to be just a little bit beneath the bottom border of the positive. If the blue doesn't usher in the green, the yellow comes in and probably closes us out. So if we see a yellow, we'll probably fall beneath it. The channel flips from positive to negative, and you wait for the next ride down. So you would have sold at the top. Notice the two-pole oscillator. Notice the pi cycle top about to hit its line of excitement again. This could very well be a bounce out. After blue comes yellow, or the blue can usher in the green. So we're waiting to see what happens here. Market's cooling up with the last 20 seconds. 10, 20. All right. Will the blue channel open up, or after blue comes yellow? We may pull out and the blue channel sustains just for a little longer. It can become narrow, close, and then open up again if it doesn't have a total close. All right, now I still see blue. It's not going to last long at all, in my opinion. Things can go really weak. Resistance still greater than support. Support should fly over if we were to get out of there. All right, so now you're about to flip. And you can see we're down through the positive. And let it flip. Okay, so we wanted to show you that on the 9 and the 21. Let's see a little yellow here. When we see yellow, we can travel up through the negative, but right now down through the positive. And let's overlay more information as we still see resistance is greater than support. So we go down. As we count cadence, we know that there is a red triangle underneath the yellow, and that paints the candles from blue to yellow, indicating a downward trajectory. We know after yellow comes blue. And so we'll see if we get a yellow here, meaning the blue channel does flip to yellow, we can actually go up through the negative. Any negative, we can go up. Now we're yellow, we can go up. Okay, so you see that? The least little bit, it's just like, it's a beautiful thing when you see it on higher time frames. Okay, but how far will it open up, yet to be determined. So we would have sold up here, and now we're waiting for another entry point. We're waiting for the yellow to open up a little more, and then when it looks like it wants to close, but now we're going to add more information over it. Okay, so that is the 9 and the 21. Your 2 and the 6 always carries you up and down the 9 and the 21. Carries you down the 9 and the 21 golden cross. Carries you up the 9 and 21 death cross. It sounds weird, and this dynamic has a lot of people confused. All right, but you can see the oscillations there. Now, simple moving average wind channels, let's add the beautiful 13 and 45. Correction, 13 and 48. Notice what appears, the circles in orange. This is the channel of the 13 and the 48. Same rule applies. through the negative, it's red. Down through the positive, it's green. Okay, so now you're looking at two pieces of information that can overlap and intertwine with each other. So we can see we're positive here on the 13 and the 48, and we have to be beneath it before it flips, and it is about to flip. Let's see, can we expand things or open it up a little more? All right, so now we have downward pressure about to flip. They're coming closer. So most likely, when it flips, you can go up through the 9 and the 21. Down through the positive, up through the negative. Now look at that. You got two overlapping each other. And you can predict where the price is going to move first. All right, so we're down through the positive. Just a little hair, right? It doesn't really have to move, just a little bit more. But look what's happening here, right? Some competition going on. I almost knew that was going to happen because it is so close together. We need to be down through, and we're down. You see that? Now, when this flips, the green turns red, we can travel up through the 13 and the 48 and up through the 9 and the 21. All right, so when it flips, we'll probably stay down for a second until we go from green to red, but we have to see what happens. And again, notice you travel up through the negative before it closes. It holds true even for the 13 and the 48. And you travel down through the positive. It still holds true to the 13 and the 48 golden cross here. And so as you look at the 9 and the 21, you know you had to be beneath that positivity before it closed out. And you know you travel down through the positive 13 and 48 green. This watching the channels lets you know when you can possibly go up or down. You're constantly watching all the information in the chart, and this makes you dangerously better, right? Because now the emotion is taken out of the way, and you're not doing a scratch off ticket. You're strategizing and planning and looking at the rules to follow. Now, we're going to add the 50 and the 200 golden cross and death cross. Okay, so we know about the 9 and the 21, what is positive, blue, travel down through blue, and what is negative, yellow, travel up through yellow. We know about the 13 and the 48 in the midst of the orange dots. We travel up through the negative, red, and we travel down through the positive, green. All right, so now I do have some indicators whenever I flip positive here and the channel closes out. And when I'm about to flip negative here and the green channel closes out and eventually turns to red unless you have more strength. Now, the 9 and the 21, okay, I have the little white arrows too and the white squares, and I have the yellow arrows and the yellow larger arrows. So you can see white and yellow. This white and the yellow is typically my 13 and 48 golden cross and death cross. All right, now let's add the 50 and the 200 again. The 15 and the 200. It's solid black border lines. Okay. And the first thing you want to look at to see if it's negative or positive, because you travel down through negative. Before this 50 and the 200 channel closes out here, you will be above it. right? So now you can watch the setup, right? Are you all negative now? Yes. Negative on the 9 and the 21, negative on the 13 and the 48, negative on the 50 and the 200. You're all negative. So now let's see, can we cross up through negative, and it takes a strong 2 and the 6, which we currently have, to print. So it depends on what the next few seconds hold. All right. So now you can see how this is a nice setup here. Can you be driven down? Oh, yes, you can be. And this is where cadence come into play, as well as looking at when your golden cross is about to come in. The yellow is narrow. It wants to flip and turn green. And green is going to carry you through. Okay. All right. We know before the yellow channel closes out, we'll be above it. We know before the 13 and the 48, the orange channel closes out, you know you'll be above it. You know before the 50 and the 200 closes out, you will be above it. Can you still go down? Yes. But usually things play out accordingly. You're in the midst of a 1 and the 3 death cross that wants to usher in the 2 and the 6. What do you think will happen? We can go down because it looks like the yellow channel is still pretty much open. It's not about to close yet. The 13 and the 48 is still open. The 9 and the 21, though, is like a magnet. So 10-second chart, before this major channel closes up, I will be like, okay, I see what's going on here. I see what's going on with the pi cycle top. We're about to get into an area of possible accumulation. Now, this is when I want to add the decision maker. Okay. Notice before the 50 and the 200 negative death cross channel closes out, and we should get a large green triangle any moment to bring in the golden cross of the 50 and the 200. That is within the large solid black lines. The decision maker, the 2 and the 6, is getting more narrow. We can't have some downward pressure. But so far, things are looking really good. You can see the markets heating up. It looks like they're heating up in the background. So this can be a move to the upside. All right, cadence. The yellow ushers in the red. We can go down. That can open up the yellow a little more, but it's coming close to close out. We have to be above it. It's just the rule. Before the yellow flips blue, we have to be above it. All right, notice the pi. That was a good entry point with pi. All right, so we're above it. The yellow is flipping the blue. Before the 13 and the 48 closes out, we have to be above it. But the blue channel, we can be down through blue of the 9 and the 21. Down and up. So now really the 13 and the 48 is in play. What carries you through the 13 and the 48? The blue. 9 and 21 carries you through that. All right, as we're looking, the 50 and the 200 is becoming more narrow. This method is how I predicted today that around 1 o'clock or so, after 12:30, I'm looking for upward price movement based on moving averages and where you are. All right, so the 13 and the 48 is closing out. We have to be above it before it flips from negative to positive. We travel up through negative. The 9 and the 21 carries you through the 13 and the 48, along with the 2 and the 3. We should be above it. The 50 and the 200 is opening up a little bit. We're above the 13 and the 48. Can we travel down? We still can. A flash crash and then back up again. But there it is. Beautiful. All right, so now the decision maker. Let's add. Oh, don't tell me I have to minimize the on the chart. Hopefully that works. And you see that big candle just came in because the 50 and the 200 needs to close out, right? And you have to be above it. That's a good spike right there. All right, so now you're right in the wind and the wave of the 9 and the 21. And the 48 is blue here and blue here. Before it closes, you'll be above it. How far above it yet to be determined, but the 50 and the 200 before it closes. Can you have a flash crash? Yes. But before that black channel closes, you will be above it. All right. So the 50 and the 200. Let's put on this, and first let's show the settings. Just so we know we're dealing with the 200 and the 400. I want to talk about that one first. And we know the 111 and the 700 is going to be there. So let's put these lines on. All right, hopefully I put them on. Okay, let's do this. All right, dotted white lines, dotted green lines. All right, there it is. Now, more information. This is why we're up here, because we have to travel up through the negative. Now, doesn't that give you a floor or basement price point as the solid or dotted white lines begin to close, right? Can you have a flash crash? Yes, you can travel down through blue at least. And that is the 13 and 48, part of it in there, right? And where's the 13 and the 48 is, and the 9 and the 21 is. So we can travel down through that. I would take profits right about now. Now you can skip, hop, and dance alongside of it, but if that was a good run, and keep in mind, not on the 10-second chart, but on a higher time frame, 5-minute, 11-minute, 15, 30, 45, 1 hour, 2 hour, it's like prophetic. I love the truth. The green in here is the 200 and the 400. This 200 and 400 is a decision maker. I want you to think of it as that. Wherever you are, if you ever see candles in there within this dotted green line, between the 200 and the 400, a decision has to be made. You have to make a decision and decide if the market is moving up or down, because it will be deciding in that channel. Okay. All right, we see the market's cooling down and heating up. We can count cadence to decide if we should stay in or out of the trade. We see value sort of coming in. We see the pi cycle. We see the green line. The leading line is the green line. All right, so this has been a good run as high as here. And you start touching the 21 simple moving average, you can be like out of there, right? But we're above the 50 and the 200 of the black line, okay? And that went from negative to positive, right? You have green, you have a channel by which you can go down. The market's heating up. At 21 simple moving average is always your reference point. You're watching the width of the 9 and the 21 to plan your exit. You start to see that bad boy closing. You start touching candles on the 21 simple moving average or below it, it'd be time to get out. This may be the one that touches the 9 and the 21. It could be a flash crash because we're green on the 9 and the 21, green on the 13 and the 48. We're still positive on the 111 and 700, the dotted white lines, still positive. It's coming to a rapid close. So right there, you see that? Right there is almost like saying too close for comfort, right? Now after yellow comes blue. There's the blue. This could be a temporary bump up. The resistance is greater than support. You can still go down. I'd be out of there right there. That's just me. Because we're beneath the 21 simple moving average. And before we flip from positive to the negative, we traveled down through the positive. So now we have downward price action. We would have took profits there. And the pi cycle top would have let us know, hey, a few days ago, this ride is basically over, right? Line can be a gap, or it could be a bridge to get out. I know this has made you better. Just looking at this, has made you better. This is why I have so much information on the chart, and I feel confident about the forecast of price movement direction. And using the borders, I can estimate what the price is, but I don't really like to do so, even though you sort of can, right? You can give a ballpark range of where you can be. Okay. Now, let's go, since it's 11:56, about to hit the 25th of November. Let's go into a 6-hour time frame. All right. And I like when things slow down. Let's readjust the chart. Our pi cycle towards the bottom of the screen is the one we're focused on. And you can see the beautiful picture here. You can just appreciate what you see, right? You know that before the 13 and the 48, death cross closes. And we just got confirmation here that the golden cross wants to come in. So it's pretty much done with that 13 and 48 death cross. Before it closes, you will be above it. Okay. Now, can you travel down through the blue, the positive? Yes. But you can at least guesstimate what the price point would be, at least beneath the channel. I'm waiting on seconds to tick by, and they're not ticking by because we're not on the 6-second. I'm sorry, the 10-second chart, right? You get so used to the action moving, but now we're moving in slow motion. Time to process, time to drink a nice glass of delicious sweet Moscato or Ruscato and eat some salt, chips, pretzels, or whatever it may be, and just appreciate where you are in price action. All right, and this is why an account with Robinhood, Coinbase, and Uphold are so invaluable, as well as being able to access this information. With the right moves, it pays for itself. With the right indicators, it pays for itself. I'm not going to have anything that I'm not using that is not going to have the ability to pay for itself. All right. And if I'm just not making gains, then I'm wasting money, or it can be a hobby for me because I have to have a vent, a place to escape into, to engage and hone my mind and forget about everything else. This is a serious form of meditation for me. When I look at this beautiful chart layout I nicknamed the printing press, it reminds me of endless hours of meditation, trying to glean and learn the information in the chart. Someone can teach you, but when you have enough information to build up your confidence, as you begin to look at the chart, a self-teacher will come alive in you. Now, what was first book knowledge and theoretical is now experiential knowledge, because it's real to you to a point where you can understand. You can travel up through red, and you can staircase your step through the 13 and the 48, through the 50 and the 200, the black borders, and be above that, through the 200 and 400, the decision maker within this green dotted channel here. And as these close out up through the 111,700 death cross, you travel through the negative, but down the positive. So with these indicators, especially the simple moving average wind channels, combined with the weighted moving average wind channels, you can decide if you're moving up or down with a high level of accuracy and probability. We see the markets heating up in the background, right? We see that. I can take the smooth Heikin-Ashi or the Heikin-Ashi candles off because these candles are having enough width to show the trend of downward price action, yellow, and upward price action, blue. You can see the 2 and the 6 channel is pretty wide open. 6 hours is a long time compared to 10 seconds for things to happen. So this is the beauty of making bigger gains. It's just beautiful. When you make a decision, you look at the probability. And if one fail-safe mechanism doesn't work, then just know general rules before your death cross channels close out. In many cases, you're above the closure. But when it turns positive, that can be price action to lift you higher, but you can always travel down through positive as well as you can travel up through the negative. All right, so with that said and done, you looked at it and you predicted you're in a good spot. Just looking at the 6-hour chart alone, you're in a good spot. It would be nice to go on a faster moving chart to see a dip, because you would want to get in on the dip. But right now you can see bridge, line, led into a bridge based on cadence, led into a bridge. You see the market's heating up. And right here could have been tricky, right? Because you know after the blue comes the yellow. You know after the green comes the red. We're due for a red into the future. And it's going to take a yellow, which after blue comes yellow, to take there. So sooner or later, we'll most likely travel down through blue. Or maybe a little bit, but not far. Because after that yellow comes in, the 1 and the 3 death cross, and it could happen here, or it can happen in the next 6-hour segment. And that time frame towards the bottom of the screen is so small. From 1 o'clock a.m. to 6:59 a.m. So we may possibly do a talk in the morning and look at the 6-hour chart to see where we are. And we can take 6-hour blocks at a time. But this is nice to look at. You don't want to get in a trade and then doubt yourself. We know the price can go down the blue. And we can also get into this decision-making zone right here in the midst of the dotted green lines. And based on our information in the chart, we can fly out of there to the upside. If we fly down, channels open up more or wider, or if they were going to close, they can't open. So there's a great probability that as you look at the if this, then that scenario, there's a great probability that just before the 13 and the 48, the channel in the midst of the orange dots close, you can fly down and be beneath the blue, which prolongs the channel from closing just a little bit more, right? Because if you're above it, you want to close the negatives. If you're beneath it, you want to open the negatives, right? So this channel, even though right here we cut up into it, it wears it out just a little bit when we come down. It's not as narrow, or I would say it's not as full as it is here than it was here. So you're into the channel, and now it's more narrow. Eat into the channel. The further you are away from it, the more you can open the channel up again, until it's time to eat into the candle, touch the 21 simple moving average in the midst of the candle, and that is sometimes a clear sign. You land another candle on it or above it, you flatten it out, and it may be time to close out. All right. I wish I had simple moving averages in the midst of them, but you can tell about where the middle of the channel is. For the 50 and the 200, the black lines, oh, the green line is about in the middle, right? The 111 and the 700, the dotted white lines, oh, the black line is about in the middle. And these are like elevators, stair steps, where you can rest on as far as price point. And that's really nice, up to the downside or to the upside. All right, with that said and done, we counted cadence. We know that after blue comes yellow. A yellow can be into our future. The markets can heat up a little more, or they can totally flip the other way and cool off for a minute and give us a break. But after the yellow comes in, and looking at what could potentially happen of traveling down through blue, we know we'd have to be above the 13 and the 48 before it closes. same thing. Slower moving chart, bigger moves, bigger percentages. And now you're almost expert just to take your hand a little further and to get a hold of some cool software that says, you know what? The more you look at it, self-education, you're taking the time and you are getting better. It becomes a logical thing when you are saying to yourself, you know what? I should be trading, because anyone can appreciate skills that pay the bills or another stream of potential income where you take the same amount every time. It could be $1,000. It can be $2,000. It can be $3,000. And that same amount over and over again yields you never ending interest with the same principal amount. So you might as well grow your bags. And I'm glad that everyone has been on this beautiful journey. God's timing is deliciously impeccable when you cooperate with your inner, because you believe something. Faith is an everyday walk. I approach the charts by faith, knowing that if I give my time to it, the Lord, right? The Lord, the mighty owner, the Lord, like a landlord, the Lord, the one who owns. If you follow his voice and follow him, he'll lead you and guide you into the areas he wants to put finances into your hand. But so many times people handcuff because he wants to do one thing, but you have your taste and your preferences, right? We all talk ourselves out of something great. We did at one time or another. This one, we won't let go because we can play this game once we learn it over and over and over again. And next thing you know, you have a serious amount of money and you're betting it in one trade based on the moves, and you'll extract that interest. Now, let's look at XRP. Let's measure the percentage gain from where the price point is now to the middle of the channel between the dotted green lines and the white line. All right, so let's just measure up here. Okay, and you can see we're at about 15%, 15.69%. And with XXRP, that's 2x leverage, 30%. And with that other 2x leverage that's at a better entry price, 30% of XXRP, XRPT, the price point is really nice, $7.85. So 30% just from the move of the top channel of where we are now to about the middle here. Why do I say the middle? Because the white line is obviously sloping down. So if I put the line here and you follow the orange line straight across, right, you can see that you come down just a little bit. So I just came down here because over time that white line is going to slope down. And as we are above this dotted white line bottom border, it begins to flatten out and pull up. Okay. All right. Now, chart layout. Really nice. We have to come back and revisit this to see what prints after, what is it? After 1 o'clock a.m. This next candle will print. Let's see if the markets heat up, cool down. Let's see if the yellow 1 and the 3 death cross tries to come in. Let's see what happens. But of course, it'll be in the morning time, right? So that's all we need. We can progress through the various ones, and we have to take this seriously because on higher time frames like the 2-day time frame, we know we can travel down through some positives, right? And we've already begun that journey on this 2-day time frame. You can travel down through green. So the bigger time frame is more massive, right? The good thing is you see the charts heating up in the background for the last 4 days, right? This next candle prints on Thursday. So we'll see what this is as we look at the big picture together, right? Positive. You can travel down through the positive in stages. Before these channels close off and flip negative, we travel down through positive. So keep that in mind. So this is why we're not looking at higher time frames. We know what can happen. We know what the big picture is. And notice you're in an area of decision. The solid green color lines here. You're in the valley of decision. A decision has to be made. So when you're in that zone, you want to count cadence carefully and see where you are. And notice here, I wish I can scale things back. But of course, we have to honor time. We don't want to make the presentation too long. Back to the 6-hour time frame. Who knows? Tomorrow morning. Well, actually, it is tomorrow. In a few hours, we may or may not have time to go through higher time frames, but it's enough to look at just a few hours at a time, right? It's enough just to look at the 6-hour time frame for now. Let's save that beautiful information and let's close out with everyone needing to know where we are in market structure. We're cut on. We're here. It's happened. And we're going to let the ETFs bring more value to the XRP token for cross-border payments. Wisdom Tree, Grayscale in the lineup. Will they fire off this week? Yet to be seen, yet to be determined. But the good news is the government is open. The ETFs based on the S1 filing are likely to be approved. Value is pouring into the asset. These holders of these ETFs, these organizations, they have to have the asset XRP to back their ETF. And as far as December coming, yet to be determined, this has been a November to remember. And with just a few days left in the month, we know that we're closer to some really good price action. Really good price action. Some volatility too. A time to hodl, hold on for dear life, a time to buy, and perhaps a time to sell XXRP or XRPT, right? Leverage, 2x leverage. All right. With that said and done, everyone needs to understand I am not a financial advisor. Nothing in this presentation should be deemed as financial advice. I shouldn't have clicked on that. Let me close out that internet. All right. So stocks, bonds, cryptocurrencies, ETFs, commodities, these things can be highly volatile, but we love the volatility on this side of the house. You need to understand you could lose all of the money you invest. The exchange can go down. The electricity could go off. Things can get hacked, right? You have to be aware of that situation. Not that we move by fear, but we move by extreme wisdom because this is money we're dealing with. We don't leave money on exchanges. Not in this day and age. So we invest in a cold storage wallet. Now, when your craft begins to make money for you, you'll appreciate the interest and the gains. And that's when you use someone else's money that you use skills to put into your enlarged tent, your nets. When you get that extra, then you can have room to invest and solidify the backing of your craft, right? You don't want to be doing something and then be foolish with it because we don't have the Clarity Act yet. So everything is prone to getting hacked and stolen by so many players out there. All right, so you can lose all the money you invest. You should always do your own research and consult a qualified licensed professional. Your investments are your sole responsibility. You should know that nothing is ever guaranteed when it comes to investing. Neither I nor the platforms containing this presentation for your review are liable for any losses. This video is obviously for entertainment and leaning heavily towards the educational purposes side only. With that said and done, I'll see you on the next episode.